Welcome to the Ag Culture Podcast, where we cultivate tomorrow by inspiring agripreneurs and ag innovators through real life global perspectives in agriculture. I'm Paul Windemaller, your host on this journey of exploration and growth. On this episode of Ag Culture Podcast, I talk with Scott Woodside of Bank Barn about his journey of entrepreneurship in agriculture. We will discuss about his journey of how he and his team have pursued building a fintech company in ag and balancing that role from Silicon Valley to the farm, as well as what he sees ag entrepreneurs need to do to be successful in the future. Before we get into the interview, I would like to ask that if you find value in our podcast, please subscribe and share it with somebody you know. We would really appreciate it. And now, to the interview with Scott. On today's episode, we have Scott Woodside, the CEO and co-founder of Bank Barn. Scott, what is Bank Barn?
Paul, great to be here and really excited for the conversation. Bank Barn, simply stated, is an operational insights platform that helps farmers and agribusinesses make better decisions faster to optimize their efficiency and their profitability. And we use innovative financial products to help those businesses grow faster and to achieve their goals.
Awesome. So basically, in a nutshell, innovative ag lending, right?
Innovative ag lending and a suite of tools that helps both the businesses, being farms, and the lenders and those in the ecosystem to make better decisions about those businesses and to really understand what true risk is. I think both farms and banks don't really understand that concept very well for a variety of reasons. So Bank Barn does that translation for them to make sure that we can make it as efficient as possible and also reward performance in the way that we can create more competitive loans, more flexible terms, and get enough capital to the farms that need it to grow fast.
Okay, awesome. So would you say that you're kind of disrupting ag financing, or do you see it as an area ripe for disruption?
Yeah, I think when we started this journey back in January of 2022, when I began to research what is now Bank Barn and talk to farmers and talk to banks, I found two major opportunities for innovation and for development. One was that the way that ag lending is done and has been done for the past 50 plus years, Paul, is very sludgy. It's very slow. It's very manual. Okay, so farmers would traditionally go into a brick and mortar bank and say, hey, I need a loan, whether to buy land or an operating note. And the bank would say, great, here's an application, bring a bunch of paperwork to me, and we'll get back to you in a couple of months. So the sludginess and the slowness and the antiquities have stayed with ag lending, unfortunately. They have not developed like we've seen the consumer lending side, where fintech has really automated and streamlined many of those manual processes. So what that does is it just adds a lot of cost to the system, and those costs ultimately are passed down to the farmer in the form of higher interest rates. The second opportunity we saw for innovation was the way that loans were underwritten, essentially how credit risk was defined. And traditionally with the farm credit, let's take farm credit because they own 30% of US ag debt. Farm credit really makes their credit decisions on three documents or three inputs. One is a credit score, which we know credit scores on their own are about 50%. So literally a flip of the coin deterministic on default rates. So you could flip a coin and theoretically do better than a credit score to determine if a borrower is going to pay back on that note, right? So that's pretty incredible to use that as an input. Then the other two inputs, one is a balance sheet, which, Paul, you and I both know farms are very busy, and especially a dairy farm, their focus is on managing that business. And so, unfortunately, the balance sheet at best is probably a little bit directionally incorrect. And at worst, unfortunately, probably doesn't have the right information that we need to be able to make a decision on credit. And then the third piece is a Schedule F, which is a tax return, which of course is going to be a lagging indicator, not a leading indicator of financial performance. And so when you take all of that together and you say, well, what other data points do we have that could help us augment the credit decision process in things like herd management data, feed management data, IoT, processor data, all of that information that a dairy farm has or has access to at Bank Barn, we're using that to actually help find true risk.
So you're really looking at real time data versus, financial data that might be 6 months or a year old or even older at that point, right?
Exactly. Absolutely. And so what that allows us to do is it helps the bank make better decisions, but also for the farm, they can understand where are they at and where are they headed financially so they can make better decisions around return on investment.
Okay. Awesome. I want to step back a little bit. Part of Ag Culture podcast is delving into the entrepreneurs and the entrepreneurs in agriculture, and obviously you fit that bill, right? You're an entrepreneur in agriculture. Tell us a little bit of background on yourself. You didn't really come necessarily from a farming background. You have experience in agriculture, but just give us a little background information on yourself and how you got to where you are today.
Absolutely, Paul. So, yeah, my connection growing up to ag was a maple syrup operation in Massachusetts. And there we go. Absolutely, Michigan. Michigan is also a great producer of maple syrup. After my time in college, I joined Cargill, which is one of the larger ag companies in the world, because I was interested in how do we merge essentially what is happening on the farm to what the consumer wants in their grocery cart and some of the sustainability impacts of that. So that was my initial interest area. And I wanted to understand that at the base of the supply chain. So Cargill was a great place to start to get my hands dirty. So I was a grain trader, Paul, for a couple of years, trading originating grain in the Mid South and Midwest, corn, soybeans, sorghum, wheat, trading that to the global markets. And then had the opportunity to join their commercial dairy team as a strategy analyst, which really was like, hey, how do we help Cargill's dairy team that sells feed and additives and does nutritional support to farms across the US find new market opportunities? That led me to a bunch of supply chain projects. One of those was with Dannon Yogurt and building out a specialty milk supply chain that had some non GMO feed involved. I then actually had the chance to join Danone, which is the parent company of Dannon, moved to Amsterdam and started working in their upstream agriculture team with farmers all over the world. So I've seen cows in Russia, Morocco, Algeria, Argentina, in a variety of production systems, but with the common theme of these farms are looking for technology to help improve their businesses, but also what I call kind of future proofing. So, how do we get technologies that will allow us to have the license to operate with all of these government and environmental pressures that are coming down the pike? Then after that, I jumped into entrepreneurship, right? As you said at the beginning, because I thought, hey, what better way to disrupt or create more innovation faster than to join these companies that are going from zero to one and build a company going from zero to one versus one to N, which a lot of these corporations, that's the stage they're at. So the first opportunity was with a small phytogenic feed additive company called Animal Health Vision International that wanted to bring their technology from Europe to the United States. I helped build out that business over a couple of years and do some proof of concept testing in the market. And then my Bank Barn journey began January of 2022, did a lot of customer discovery and built out what is the foundation that is now Bank Barn. Met my co-founder, Evan Leung, during that process, and our CTO, Praveen Mandel, who both of those guys come from a non-ag background. So again, this is more of hey, bringing industry knowledge from other places into the agricultural sphere to create innovation.
Awesome. So you had mentioned your co-founder. How did you guys connect, and what do you each bring to the table? Do you think at Bank Barn that really makes it work?
Yeah, it's a great question. So Evan, his experience is in traditional technology and fintech on the consumer side. He had experience at Avalara, which is a sales tax automation company, and then Amazon Web Services. And so we actually met during, kind of my entrepreneur in residence at Builders. He was part of the Builders network, and so was connected via the venture capital firm that initially incubated Bank Barn. Met him during that process, and he really brings more of the business operations, the classic operating officer skills to the table, and also has experience, like I said, in consumer financial technology, which it's some of the same themes that we're trying to apply to the agricultural sector. And then Praveen Mandel, our CTO, has had numerous of successful startups. So he's done the entrepreneurship thing before in other industries, and also brings with him an incredible experience in AI startups specifically. So he's built out AI tools for large companies as part of a consulting firm, and also as part of Volta Charging, which is a very large electric car charging network company in the United States. So he really brings the technical expertise as well as the business building experience that young startups definitely need to succeed.
That's great. And you had mentioned being part of an incubator, and I believe you were in at least one other accelerator. In agriculture, we don't really look at those as an avenue for getting a business, an ag business launched. What has your experience been with those coming through that avenue?
Yeah, I think it's interesting because all startups, for let's say the pre-seed through Series A, which is really that's early stage, we all have different needs, but there's a lot of commonalities, right? We know that we need to find product market fit. We know that we likely need to raise more money and we need to build a full-time team. And so what accelerators can help you do is kind of define, okay, you have all of these interesting opportunities. How should you go through the process of evaluating what is actually true product market fit and how do you get there? They can also help to connect you to potential customers and partners, which will further validate the product market fit discovery process. They can help connect you to investors to raise more money, but that's really helpful. And for us, via our accelerators and our incubation, that's definitely helped in that regard. And then the team dynamic piece too, they can help you think through this is what you need in terms of resources today to succeed. But once you start generating revenue and you've got a customer pipeline and things are scaling, this is how you should build out that team to support that type of growth. So I think those three things accelerators do really well at. Now, again, every startup though has different needs, and so I would advise all entrepreneurs to be strategic about the accelerators that you evaluate to make sure that they're going to achieve those outcomes. Because it is a lot of time. You do have to put in a lot, Paul, to be able to get those outcomes that you desire.
Definitely doesn't matter what way you're coming at a new business in agriculture. It's going to be a lot of work, right?
Absolutely. Yeah, I mean, right? And so, dairy farming is a bit different because, every day you are making decisions on the farm that ultimately can generate greater profitability. Whereas a crop farmer, you may only have 4 or 5 times during the year that you can make a decision to influence outcome. A livestock business, it's every single day. And really, crop farming, unless you have irrigation, it's really all about the weather, right? That can make or break a year for you. So that's what's unique about livestock farming, and I think where the opportunities are.
Yeah. So speaking of farmers, obviously that's a big part of what you're doing. How have you interacted with farmers in your business so far, and where do you see that going in the future?
Yeah, we definitely had an unfair advantage in that respect because of my experience at Cargill and Danone and Animal Health Vision International, where I had existing farmer relationships. So during this customer discovery process that we went through in 2022, that was my first call was to a friend of mine, a dairy farmer in the San Joaquin Valley of California, to say, "Hey, this is what we're thinking about building. Are we crazy?" And he's like, "No, like ag lending's pretty messed up, and like this is the experience I've had." So I think initially, Paul, it like validated like we're not crazy. There's something here, and I've used these relationships and built new ones, including right with yourself. We met in May at the DFA Young Farmer Conference in Nashville to better understand as we're building out our solutions. How do we always make sure that they are going to enable the outcomes that we want for farmers? Because when we started this, it's all about how do we democratize finance for dairy farmers first, and then other farmers to make sure they can build their businesses profitably. So I've tried to use them as design partners and as sounding boards to ensure that we're on the right path. And ultimately, we're building this. Are you going to pay for it at some point in time? Right? Who's sharing the value? That's also key because you don't want to build a bunch of things that ultimately no one's going to pay for at the end of the day.
Right. I guess that's a great question. I don't know if you want to go into it or not, but how are you looking to monetize your business? Obviously, you aren't necessarily the ones lending the money today, right?
That's correct. That's correct. We have banking partners that are lending the money, and we're facilitating or really the technology layer between the borrower and the lending institution. So yeah, it's a great question. How are we monetizing it? There's a few different ways, and it depends upon the product that we're talking about. But very simply, the lending institution, they want to grow their business. They want to grow, right? How many borrowers am I touching? And how much money am I able to distribute to those borrowers? So for every borrower that we're able to connect them to, and every dollar that is outflowed, right, or sent to that borrower, we're taking a take rate on that. Now it's relatively small at the beginning. It's a lead generation fee or an origination fee. but it helps us validate our business model. And as we take more of that lending life cycle, as we can take over servicing, as an example of the loan, monitoring of the loan, that take rate can grow larger. All of that money is paid from the lending institution to Bank Barn. Now, some of the other products that we're developing, let's talk about maybe a risk monitoring platform for one of our processing partners to better understand the health of their lending portfolio or their farmer portfolio. That would be more of a traditional software as a service contract with that processor. They're using a tool that Bank Barn has built or a software. They're going to pay us an annual fee to utilize that. And then the products that we'll develop for a farm, as an example, can we help a farmer make better financial decisions? Maybe if the farmer is utilizing Bank Barn's banking tools or taking a loan out with Bank Barn, those tools would be free to use. But if the farmer chose a different avenue to get his financial products or services, then maybe we would charge a nominal fee for that farmer to utilize some of our models or tools.
Okay. Now, going back to what you had originally started talking about with Bank Barn, you're looking at utilizing real time data versus old financial numbers to monitor the success of a loan. That's that's quite a bit of data to gather in to a system and to keep track of and disseminate. How have you been doing that, and what kind of roadblocks have you come across along the way? I'm sure there's been a few to get where you're going, but what have you seen so far?
Yeah, absolutely. So that entire opportunity is an elephant, and we eat an elephant one bite at a time. So we're breaking it down into data segments or data buckets. So we've successfully been able to bring in, as an example, the processor data, right? So Paul, on your farm, I don't know how many times a week the milk truck comes, but every time milk is sent to the processing plant, you're going to get a download of the milk quality information from that load of milk. So we're able to take that as well as the financial information on a monthly basis that comes from the milk check. And then we can now aggregate that, and we've set up our proprietary algorithms to be able to help both the farm and the processor or the bank understand, is this farm operating in a normal zone, or is the volatility maybe of some of these data points going to an area that might indicate higher risk. So we've successfully done that with processor data. We're now in the process of collecting some of the on-farm data, herd management, feed management, IoT devices, obviously sensor data with robots, aggregating that data, parsing it, and then running that through some of our models and algorithms to be able to spit out the information that we need to help determine risk and to help these players make better decisions. So that's a work in progress. We're obviously very bullish that we can achieve that. Some of the roadblocks that we see are, okay, every farm is maybe using a different type of software. So there's some data standardization that has to happen. Some of that data may not be as accessible on some farms than others if they don't have access to the cloud. So how do we get that data from the on-premise zone where it sits into a place where we can aggregate it, manipulate it, and analyze it? That's another roadblock. But there are tools being built right now that can make that a lot easier. And I think, again, if we take it in buckets and we focus on, okay, we're going to do this bucket, then this bucket, then this bucket, we understand those roadblocks, which we do, then it's just a process and it's about execution. But I think the most important thing, if the farmer believes in this process, which so many of our farmer partners do, and they're like, hey, this makes a lot more sense. This is the data that I manage every single day. And now the ecosystem wants to use that data to make decisions about some of the financial products that I can have access to. That seems to be very logical to them. And they seem to want to engage. So we're really focused on partnering with farms that I would call our tip of the spear in terms of their innovation mindset.
And you recently launched kind of a beta for your platform. Is that correct?
We did, yes. So we are now able to originate operating lines of credit up to $1 million in all 50 states in just a fraction of the time that it would traditionally take to originate an operating note.
So, what are some of the learnings that you had through that? And are there any unexpected things that kind of came up once you launched that beta?
Yeah, I think the overwhelming response from the farmer partners that have demoed the platform. We actually had a farm just a few weeks ago actually apply for a loan and was successfully approved for that loan. Dairy farmer in Wisconsin. They love the front end. They love the speed, the efficiency. Obviously the ability to be able to get an indicator of their financial health by plugging in those metrics and saying, hey, I'm a Bank Barn score of a 75 or an 84, and this is what is going very well on my finances, and these are things that I can maybe improve upon. There's been a lot of great feedback around that. One of the key learnings is always understand if you're building a product, that part of that product has to rely on a partner. For us, it's an external banking partner to make sure that you understand all of the intricacies of that relationship and what are you responsible for versus what the partner is responsible for. I think that's key because, right, so much in building a product, you're focused on what you can control, but the product experience may have some other elements that someone else controls, and you want to make sure that you understand that and you can align expectations there. So I think that would be key. But for us, right, we're heads down again, focused on building out these products with our design farmers and with some of our partners, that are larger agribusinesses. And we have some exciting product launches planned for quarter 1 and quarter 2 of 2024.
Okay, awesome, awesome. And one thing I was going to ask, we kind of touched base on when we were talking about my farm the last time we were together. I was explaining to you guys the uniqueness of my business model for my farm, right? Financially, how that looks, and it's very, very different, right? Have you run across that, and do you feel like you guys can be more flexible in what you're doing, looking at a wider variety of business models than what traditional banks seem to understand?
Yeah, I think, Paul, I've run across a variety of farms, both in dairy and outside of dairy, that I would kind of categorize as entrepreneur farmers. They run their businesses in different ways. They usually have several businesses that are a part of what they do, and they're non-traditional in the way that they operate. And banks don't understand that at all, traditionally, right? And they,
That's right.
it's not. We're not here to bash banks, but banks, especially the farm credit system, they are highly regulated institutions. They're government sponsored entities that have to do things a certain way. But that's great for us as Bank Barn because that leaves an area of the market that we can go in and create value for the end user. So, yes, I think that the key to understanding how do we unlock innovative financial products for those type of farms, Paul, is going to be through data and through monitoring. Because what I hear time and time again from banks, businesses that we don't understand. It could be a dairy farmer, it could be someone that's in the cow calf space that maybe sells direct to consumers and also has a trucking business and is doing custom harvesting. If we can't track what they're doing, it makes us very uncomfortable to lend them money. And so we think an easy way to solve that, if from a dairy farm perspective, if we have data that's able to show us dynamically how that business is doing, and the farmer is willing to share that information, then you eliminate the time series risk. And if you can project forward, even just with simple algorithms, but the next phase is with AI to say, okay, this business is headed in this direction. And because of XYZ market factors, the risk is X or Y. Then as a bank, I'm a lot more comfortable lending money to you or creating some way for you to grow your business. And I think Bank Barn doing that in the middle is the way to solve for it because the banks don't have this capability, Paul. They really don't. And every single day, banks know less and less about these farms for a variety of reasons. And so that's why I think Bank Barn and companies like us have a tremendous role to play to help unlock what I really call financial freedom and efficiency for these types of businesses. And if I may add in closing, those businesses are only growing in number. So I'm seeing a lot more of those businesses over the past couple of years that we've been at this at Bank Barn because, again, I think there's opportunities in the food supply chain for these businesses to exist. So we need to find a way to fund them.
Yeah. You had mentioned AI, and you think there's a role to play there. What does that look like in your mind?
Yeah, so let's clarify because of course some of our audience, right? They're in the
Not
last second.
artificial
Not artificial
insemination.
insemination, artificial intelligence.
There you go.
So I think the role to play. I think initially everyone's getting a lot of hype around generative AI and right chatbots, etc. I think it's interesting, but I think actually the more like double off the wall, if you will, like initially coming out of the gates, is can we take the data that we already have on these farms and use machine learning to help predict outcomes which can immediately help you make better decisions. So it's not about, can I use a chat bot as an AI farm assistant? I think, again, that's interesting. That's an interesting use case. But the better use cases are, I've got a bunch of data. It's not aggregated. I don't know how X and Y and Z correlate to each other. Can you use machine learning to help me predict outcomes? That is something that is well within the reach of many businesses, and that's something that we're working on as Bank Barn. And if we can do that, then we can immediately help you to generate a greater return on investment. So I think the dairy industry is really poised for tremendous advances here because of the quality and quantity of data that the dairy industry possesses. I think row crops, to an extent, there's opportunities there too, but many of those businesses just do not have the same amount of data that a dairy farmer has. I mean, a cow generates 2 billion data points over her lifetime. That's a lot of
That's
information.
incredible.
Yeah, for these machine learning, right? In machine learning, you need a lot of data. And so it allows you then to be able to crunch that data and come up with these models that can help predict outcomes, which gives you the power of making better decisions.
What a lot of people don't realize, like myself, I've had milking robots for 7 years now. I've used artificial intelligence for 7 years. It's already been doing that for 7 years. You didn't call it that 7 years ago, but that's what it is, right? So
You're exactly right.
it's
Yeah,
it's really
terminology
funny
has
when you hear
evolved.
people just they're blowing their minds up about artificial intelligence taking over the world, and we've been using it for almost a decade in on a startup dairy farm. So
Yeah, no, exactly. I'm curious, Bob. I mean, how do you think it would impact your business? Have you thought about AI in other forms outside of the robots? Do you have a
yeah,
bias here?
there's so many, like you said, there's so many data points that you can collect on a cow, just from the standpoint of locomotion scoring and things that the robot doesn't right now detect as well, like body temperature and other metrics like that. I think will, once we get sensory, I mean, you got to have the sensory technology to be able to capture that data in order
Right.
to actually get it to the computer to
To build a model.
disseminate it. Yeah.
Yep.
So as
Yep.
that sensory technology comes down in price and finds different ways, like I know there's some guys in the UK. I'm hoping to get on the podcast here that are developing a very very small piece of material that they can put on an ear tag. So you put an ear tag on like you would on any cow, and that right there would give you more information than what I have for my robots. So
So another
that stuff's
biosensor
coming.
application. Yeah.
Right, right. There's all those biosensors are coming, and there's already the bolus sensories
The
technology that's
smart
available.
boluses.
Yeah,
Yep. Yeah, exactly.
all those type of things. You don't need to have robots in order to get that information anymore.
Right. Exactly. And so with these data sets that then become available, they're really high quality because they're passively collecting data. The data is already standardized. You don't have to manually input it. And then you're able then to aggregate that with a tool. Now you have, right, the ability then to make just fine tune the decisions, right? Get more
Right,
detailed. Yeah,
definitely.
absolutely.
And be more proactive on being able to use that information versus just eyesight, like, hey, that cow is sick. Well, no, I knew she was sick 3 days ago because of all these data points that were collected, and now we can treat her a lot less invasively and a lot more effectively ahead of us even noticing she was sick. That's what's been really cool to me
Prevention is the
about it.
best medicine. That's it.
That's right. That's right.
Yep. Yep.
Have you gotten support from other areas in the ag community that you weren't expecting or necessarily looking for?
Yeah, I mean, I think we talked a little bit about some of the design farmers and the innovative farmer partners that we've worked with. I think the support there has been tremendous. We have, I would say, the design farms that, I talk to about product development and is this, ultimately solving the problem that we set out to solve. That support has been great. We also have farmers that are on our board of advisors that I talk to every couple of weeks that kind of help steer again product development and business development. So that's been really great. And then also a ton of support from industry, larger agribusinesses. I talked about a processor that we're working with. We're also working with a couple of large banks. And these guys, they really want to not only help farmers to access innovative financing products, but they also want to put these tools in the hands of farmers in terms of our models and our software to help those businesses become more profitable and succeed. So I've actually been, excited and further inspired that these larger businesses that farmers may think are maybe a little bit predatory in nature in certain ways, actually want these farm businesses to succeed, and they're willing to partner with startups that have the tools that can help these guys become more profitable. So it does seem to be like there is a lot of incentives that are aligning throughout the supply chain and the ecosystem, and that's a good thing. That
Yeah, that's
usually
great to
means
hear.
that you're on the right track.
Right, right. You just mentioned in there that you have a board of advisors. Now, that's one thing that myself I've been working hard to get for my businesses. How important has that been to you in your journey so far?
It's critical. I mean, it's mission critical to have a strong advisory network. And so I've gone out, Paul, and I've first, I meet these people. Some are folks that I've known for a long time, but some are folks that I've met just during the bank barn experience. And I get to know them as a person, the type of businesses that they're running, and then the synergies between what they're doing and what Bank Barn's mission is, and ultimately what role can they play to help steer this to success. And so all of these advisors have equity in the business. I think that's super important to make sure that you're giving them shares of your business if they're going to give you their time and expertise in their network. To have skin in the game in that sense, I think is critical if you're going to have a board of advisors, and then understanding what role do they want to play. Some of our advisors are helping us on the farm side, whether that's introductions to other farms to pilot some of our technology, whether that is advising us on the business model that we would utilize, or just simply giving us feedback on some of the product development. We have other advisors that are helping us with fundraising and others that are helping us with larger agribusinesses. But I think to have a sounding board to say, like, hey, am I crazy? Or like, should we do this? It's critical. And to have these people be experts, right? These are farmer owners. One of our advisors is a large dairy farmer owner in South Dakota, and also is on the board of Agribank, one of the largest funding institutions for the farm credit system. So he has his legs straddled in two different worlds. He can give us a really, really interesting perspective on our technology and how it applies to the financial world and farming.
Awesome. What are some things that you think are just critical for somebody starting out in their career that might be an entrepreneur in agriculture to really hone in on and focus on?
Yeah, I think the first is, are you solving a problem that someone is going to pay you money for to solve? I think that is the most critical one. I think a lot of businesses, they're solving problems, Paul, that are maybe smaller pain points, or they're interesting problems where you provide a solution, but ultimately they're not big enough for anyone to pay you money to solve. So I think making sure that the problem is large enough that there's an economic case there. I think the second one is ensuring that you understand how the farm that you're targeting operates, right? So, what is the buying cycle for technology? Are we talking about row crops, specialty, livestock? Deeply understanding how these businesses operate is critical, because many of these startups, when they get to the go to market and the sales cycle, that's where they die, right? Because they're like, oh, I thought I could sell to a row crop farmer in this period of time, and oh, they're actually planting and they're not available, right? So, just like some of the simple stuff, I think will go a long way. I think the third too is making sure that you have a blend of the people that are building the technology, but also the people that are going to be in charge of the commercial business side of the startup. So marrying the domain expertise with the technical, I think that's a blend for success. I think the guys that are just focused on the technology, they're the ones that struggle the most.
Okay. And so you see that every day. You're sitting in Silicon Valley right now, correct?
I am. I'm speaking to you from downtown San Francisco, ground zero.
So you're ground zero of Silicon Valley. And what I mean, has there been in your mind other people that have been in agriculture tech companies a big disconnect between Silicon Valley and the farmers, and how have you kind of balanced that?
Yeah, I think when I go to meet with the farm, again, I was on your farm in August, and prior to that, I was visiting some farmers in Wisconsin and South Dakota and Minnesota. I think to level set with them, like, hey, this is where I've come from. These are the things that I've experienced, and I'm here to learn about your business. Yes, I may sit in Silicon Valley during a period of the year, where I'm based, my team's based, and my family's based. But this is my life experience so far. And farmers will give you maybe a hard time initially, but again, I have not known a farm, Paul, that if you're bringing something interesting to them that's going to help them improve their business, they're going to give you the time of day every single time if they want to be in business in the future. So they're open to innovation and new things, helping them understand where you are. I think, though, typically, like the classic trope is those that sit in Silicon Valley don't understand the heartland of America. I think there's a lot of examples of that, as generally speaking as a whole. But I also know a lot of entrepreneurs, the ones that are successful, that they spend time in the field. And it's a routine for them. It's not like I'm going to go to the field once and then I know everything. I've got a good friend of mine, his business is focused around computer vision and dairy farms, and he's at almost 2 million of ARR. He's in the field at least 1 to 2 weeks a month, still as a CEO of the business, meeting with farmers, because that's what it takes to succeed in agriculture. I think the other thing too, Paul, that maybe on the investor side they're beginning to realize is that adoption in ag, technology adoption in ag, takes longer than in other sectors for a variety of reasons. I think the main one though is just profit margins are so thin, and so farms don't have unlimited budgets to invest in technology. And so, unless it's a massive home run and you can generate 5 to 6 times their initial investment almost immediately, it's going to take a while for them to adopt that technology. And that doesn't seem to play very well with venture capitalists' playbooks and their goals, which is unfortunate. But I think in the reality, again, if you can select the right businesses and the right models, those can be tremendously successful from an investor standpoint and from a customer standpoint, being the farmer. You just have to understand that it may need a little bit more time.
Did that take quite a bit of educating on the investor part in order to get there with your investors?
We are very fortunate. Our incubating investor, Builders VC, they've been doing the ag tech investing thing for a number of years. And Jim Kim, who's on our board, who's the general partner of Builders, was an early investor in Climate Corp, was an early investor in Granular, did performance livestock analytics. So he's had a lot of experience in this industry and has had success and understands the realities of the market. So they've been great to work with. Other investors that we've talked to that we'll leave unnamed, that maybe is not the right fit, they really don't understand agriculture very well. And actually, Paul, to have those type of investors, we fortunately do not have them. Many companies do on your cap table, can be very disruptive, because these guys, year two after they've invested, they're like, why aren't you generating $20 million? Like, I thought this was going to be like Uber. It's like, hello, you know, this is not, and this is the roadmap to success, and this is what it looks like. So making sure that everyone has clear expectations is critical,
Yeah.
and finding good investors, I would say, is as good as gold, and it's the same as finding great teammates and great early customers. That again can really make or break a business. And so, to entrepreneurs out there that are just starting, make sure that you choose your capital at the beginning wisely, because your early investors are really going to help you steer the business and craft the business. And you need them to be helpful and supportive, but not overbearing and controlling.
Yeah, no, that's a great point. Great point that I think a lot of people miss until they're at the point that where you're at in your business, and then they go, "Oops, that
Yeah.
didn't work out."
Because, yeah, capital is capital. But, in the early stages, a lot of these firms want to have more control, especially, and this is important for strategic investors, companies that are thinking about taking money from a large company, let's say in the agribusiness supply chain that also invests in businesses. That could be really dangerous early on before product market fit, because they may want you to go in a different direction that aligns with their business interests, but it may not be the right thing for your business and your customers. So I would definitely, as an early stage company, steer clear of that capital until you're really aware of where you're going and how that business can help you grow.
That's great advice. What other questions do you think would be relevant to ask of somebody like you in your position for somebody just starting out?
Yeah, I mean, I think the common one that I get from a lot of folks is, why dairy? I think it's interesting talking to investors and folks in the ecosystem that maybe don't understand the livestock businesses, as closely, or dairy. They're like, why are you starting with dairy farms? I thought people aren't drinking milk anymore. Something like something crazy. I think, you and I both know this, but let's make sure the audience knows this. Dairy farmers are the most, in my opinion, the most innovative farmers in the ag ecosystem. Okay, that may ruffle some feathers, but I'm going to tell you why. Okay, they've been using software for almost 30 years. That's not true with any other farm type. Okay, if you run a farm over, let's say, 500 cows, it is virtually impossible to run that business without software. You cannot do it. It is impossible. So they've been using it the longest. They were one of the first farming segments to introduce robotics, en masse across the industry. Now we have probably close to 10% of cows in the US, or very close to it, being milked by robotics. That is only going to grow double digits from here on out. So you have biosensors on many of these farms. These farms are generating a lot of data. And many of these businesses are operating at a scale where they're generating 10, 20, $30 million, and they're really a production facility. I think, we talked about this, Paul. You see your business, right? You have a bunch of assets being cows. Those are all bioreactors that are taking in feed and producing protein and manure and butter fat. And you have to optimize that production process. It's a factory. So why are we starting with dairy? Because it's data rich, because every business, right, operates pretty much the same way. They all consume pretty much the same type of feed, and they produce the same thing on the other end. And so the opportunity with data and AI is huge. And then there's also the environmental aspect. Dairy farmers and livestock farmers are in the crosshairs environmentally because of, among other things, the methane topic. And so again, if we can help these businesses become more profitable, less carbon intense, it's a win-win for the entire industry. So that's why we're starting there. And then livestock, generally speaking, all of these businesses are production facilities. They're all taking in feed and producing protein on the other side. So our ability to then replicate what we built for dairy, for beef, for swine, for poultry, for aquaculture is going to be a challenge that we're going to be able to achieve.
Have you guys looked outside of the US already, or are you just focusing on the US market for now?
It's a great question. During the customer discovery process in 2022, I talked to a ton of farms across the world. I talked to farmers in South Africa, farmers in Turkey and Western Europe. And it was interesting. They all seem to have the same opinion on ag finance, that even in those countries, it's not really working how it should. So we definitely have our sights set on other parts of the world. I think Oceania, New Zealand, Australia would be great markets for Bank Barn. Parts of South America, including Chile. We have one of our great partners, a large dairy equipment manufacturer and technology provider. Their global headquarters are actually in Mexico. They do a lot of business in LATAM, so that's a market that we're looking at very closely. And then Western Europe, I think a lot of opportunities there. Just the farm type, the production systems in Western Europe are rather small compared to the U.S., Oceania, and LATAM, but definitely opportunities.
Great. Well, Scott, I really appreciate your time and for you being on this episode of Ag Culture Podcast. And where can people find out more about Bank Barn? Where can they find out about you?
Thanks, Paul. Yeah, it's been an absolute pleasure. I've enjoyed the conversation. And yeah, please join us in building out this business in the future of ag finance. You can find us at bankbarn.io. We're also on Facebook and we're on LinkedIn. And we'd love to have conversations with any of those out there that are interested in partnering with us or understanding more about what we do at Bank Barn. So thanks, Paul. It's been great.
Thanks. Take care, Scott.
You too.
I hope you enjoyed the perspectives of Scott's unique stories and insights that he gained through developing his agribusiness. Check out the show notes to connect with Scott and learn more about what he's doing at Bank Barn. Also, please check us out at agculturepodcast.com and connect with me, Paul Windemuller, at LinkedIn. And until next time, stay curious.